Hello, and welcome to the Josh Brown Podcast. With over 40 years of combined financial planning experience serving high net worth clients, we will discuss our favorite topics, concepts, and stories. Hello, and welcome back to the Josh Brown Podcast. I'm Deven Josh.
I'm Michelle Robinson.
And we are here today with a new episode on benefits packages. So, we've reviewed a lot of benefits packages in our days. You've probably seen more than me.
I mean, in our days, Devin, really? Just trying to make me feel old.
Yeah. But yeah, there's a lot to benefits packages that people kind of overlook. It's more than just, there's a lot of discussions when you're looking for a new job, obviously, but it's more than just the salary number. There's all the other benefits that come with it. Mm-hmm. So it's really important to take a look at that. You can have your financial professional take a look as well, as we can dig into the weeds of what is in it, what to look for. So we're just going to do a little overview today of things to look for, how to evaluate your job offer, and just other considerations. So that could be broken into 4 different categories of your benefits package. Health insurance, coverage and costs. Next would be retirement plan options and employer contributions, which are the things that most people probably think about. So you're like 401ks and stuff. Third, paid time off and flexible work policies. And then lastly, unique perks and programs that promote work-life balance. So those are all the different considerations. I've only seen, going back to our other point, I've only seen a few benefits packages. Some are on paper or really long PDFs, mm-hmm. and you really have to dig through because some have the investment options in there as well, and it's just like, man, I'm not reading all this. But then recently we had one where it's an online link, and it's really organized. You just click through. It has different options on it. I thought that one was great.
Yeah. As you mentioned, well, before we go any further, you just rocking this bow tie. Can I tell you?
Thank you.
Just rocking the bow tie,
I tied
Devin.
it myself.
Hey, that's a plus right there. So, yeah, benefits package. Think about it. If you feel that way, just imagine how sometimes the clients feel in going through these benefit package, right? You have to sit in a job on the first day, listen to them tell you about all these benefit package, and we know nobody remembers all of this information. But we love digging through that stuff because we like providing that kind of value for our client by showing them the things that they have available to them so that they could also make sure that they get access to everything that they could possible. And you mentioned that looking at salary, salary is not just the end all be all, right? Yeah. Because a salary on top of benefits is a better salary package than a salary without a benefit package, right? Because if you run the numbers,
depends on the salary, I guess.
It depends. If you're looking at, let's just throw out a big number out there, and this is just hypothetical, $500,000 salary, right? And so you're in the 35% tax bracket, right? And so if you live in a state like Virginia, you're looking at 5% state taxes. So right off the cut, that's 40% hit right there. So you're down to like $300,000. Yep. And if you have to do, we usually say 50% to 70% should be your lifestyle. And so 50% of 300,000 is $150,000, right? Yep. Not to mention any fixed expenses that you have. We haven't even put that in there. And then if you have to get your own benefits, that's going to take away from your long-term goal.
Health insurance is not cheap.
It is not cheap. Health insurance runs somewhere from individual, from $9,000 a year, you could see, up to, for family, $23,000. Yeah. So if you have somebody else who's taking over that cost for you, why not, right? Yeah. So that means you're walking away with a better salary if you have a salary on top of benefits. So it's good to compare both, right? When you're making a decision. And if you're on the market looking for a job, speak with your financial professional, because we'll be able to say, well, if you take this benefit package along with this salary, you could still maintain this type of lifestyle and still meet your goals, right? And so you want to speak to us because we are going to go through the weeds of everything, and we're going to talk about the health insurance, the disability insurance, the life insurance package, the retirement, all of that stuff. We're going to comb through to make sure that you're getting the best that you can get.
Yeah. So let's start it off. Health insurance, health and wellness benefits. So that would be your health, dental, vision, disability, life, travel insurance, and then even some things like gym memberships, mental health, or health reimbursements. So where do we want to start?
Well, before we even start there, let's debunk some myth that's sitting out there.
Okay.
So we have some myth where we saw where people are like, I'm too young, I don't need retirement benefits, right? You're a young person. So what would you say if somebody said that to you, like, hey, your salary is all that matters, you don't need any retirement plan? What would you say?
I think I know the answer. Yeah, I mean, I get to save for my retirement now, and it has so much time to just build. And I don't want to be doing that when I'm nearing retirement. So.
Exactly. But one of the wonderful things is that when you get a benefit from the company and your company is giving you a match, it also helps to move your retirement savings further in the compounding phase. And so you want to make sure if your company is offering a match, we like to call it free dollars.
It's free money.
Don't leave free dollars on the table. If you're just starting out and you can't maximize your contribution, at least do the minimum to get your free dollars that your company is offering you. So you want to make sure you get that. So that's myth number one. I don't need life insurance or disability insurance. Nothing will ever happen to me.
Things happen. Life happens.
Exactly. Because if you don't have disability insurance, guys, and something happens to you, then guess what? You are not getting, you're going to have to come from your savings. We like to call it our opportunity fund or your emergency savings.
Yep.
And so you have to take money from there to pay your life expenses until you're able to get back to work. If you have insurance, the disability company will pay those dollars out and you could still maintain your opportunity fund. Which one would you prefer? I mean, that's apples and orange, or it's just an easy answer there for me. Like, get the disability insurance and the life insurance.
If the company's offering it, then you might as well.
Exactly. So and the next one is only salary matters. I don't need benefits. What would you say to that one?
I don't need benefits. Salary's great, but the benefits have their greater aspects as well. And salary can only cover so many of these health and disability and life insurance policy premiums. And so if the company can pay for it, then I'm taking that. Exactly.
So. We have great benefits at the firm. We have professional development. I don't want to have to pay for that out of my pocket. If I have to, but if the company is offering it to me to pay for my professional development, I'm happy to swipe their card for it. So salary is not the only thing that matters, right? And we have flexible schedule where there are days when we have the opportunity where if we want to say we're going to work virtual, we have that opportunity. We have vacation. So some people don't have paid vacation.
Yep.
So those benefits are important because we all want to be able to spend time with our family at some point. So
so health and wellness benefits are definitely not to be taken for granted. Definitely look into those, and there will probably be different options for like the types of health insurance or disability coverages. So definitely don't just pick one and go with it.
Just a tad bit for you here. Own occupation disability benefit is the best one because you don't want to do any occupation. And so again, the terminology sometimes can be a little bit complicated. So just speak to your financial professional so that we could give you more information on that. It's just that we want to make sure that if you have a disability issue that happen, you'll be able to get paid and not like have to go from your emergency fund.
Yep. All right, next on the the next category is retirement plan options and employer contributions. So this is the part that most people would probably look into. So this would be your maybe 401ks, Roth 401ks, 403bs, 457s, all the different retirement plans that the employers are able to contribute to. And so what do you have to say about this? Or why is it so important?
It's important because, number one, you're setting up your future self, right? And
they're helping you with that.
And they're helping you with that, which is you cannot go wrong with additional help. So you want to be able to, if you can contribute the maximum, I'll say go for it, because if you contribute the maximum now, your dollars at work is working harder and for the longer time frame. Because if you're like in your 20s right now, you have 40-something years before retirement. Imagine maximizing your retirement funds now with 44 years of growth. You are setting yourself up for a great retirement.
Early.
Yes,
Maybe.
yes.
You could retire early, possibly.
Exactly. So you want to do that. And so, of course, you want to talk to your financial professional, because we'll be able to guide you as to how to invest those dollars, right? Where to invest them. And we will show you the best way, because your company is going to offer you different investment options. And I know sometimes just looking at all of that seems complicated, but reach out and we'll be happy to do the research for you and said, here's where the best place to invest your dollars. So I know it can be complicated. It's a lot of information.
Some, when we look at those, some will have just so many different investments and stocks because they work with Vanguard or whoever.
Right.
Some will have retirement funds. So if you retire in 2050, then they'll have a 2050 fund, and that will automatically rebalance itself the closer you get to that date, which those funds are great too. We don't always choose those. We'd like to do the investments ourselves, but it's a good quality option as well.
Right. And the only reason why we do that is because if the client has other options,
outside,
right, we want to make sure that we're diversifying their portfolios. So that's why we don't always jump to say we're going to do a target day fund, because we want to make sure that we're doing a diversified portfolio for our clients. But there's nothing wrong with a target day fund. You could start there if that's the only investment that you have, and as you build, then you could always look into other options.
And then some will have very limited options, so we'll look through those. And then like the TSP, the Thrift Savings Plan, that has the C fund, S fund, F fund, I fund,
G fund,
and G fund.
Right.
So they have those 5 funds.
They have life cycle fund. They do have some life cycle fund, and they do also have other funds if you are at a certain level of investment in your portfolio, then you could go into their mutual fund section. And so that's a different conversation for a different podcast, because that's so much more in detail.
We're just nerding out on these.
Exactly.
On these retirement plans.
Exactly. But for executives and stuff like that, some of them usually work in different hospital or nonprofit, and so they have the option of doing 403b along with 457, which if you're able to do that, oftentimes they could do the max contribution in both. So just imagine you have the ability to set aside $46,000. I'm saying $46,000, guys, because it could be 47 this year, but it's not always the same number. It's indexed for inflation, and each year you get to know what. But just think about for 2025, if you're in that position and you could put away $47,000 this year, and you could keep doing that year after year, year after year, that's a great place to be. And that's a great benefit to have, because if you don't have a retirement savings vehicle at a job, then it's going to be hard for you to put away $23,000 in a tax deferred account that's going to grow tax deferred. Guys, benefits are important.
Benefits are important. Some other things for this financial part of the benefits is bonuses. So every company is probably different with bonuses or additional compensation. Stock options, those can be... All right, so the general idea with stock options is your company will allow you to buy stock cheaper than what it is, and then sell it, and you can
Well, when we say stock, let's verify company stock for the company that you work for, not other company. So that company that you work for, they'd want you to have like a piece of the pie, right? Some form of ownership stake, and they'll give you the ability to go ahead and say, okay, you could purchase the company stock at a cheaper price. And so over time, you'll have access to more compensation through that, because you, after you get vested, you could sell it, right? And you could do what you want to do with it. So
So if that's in your benefits package, definitely speak to a financial professional about it. They can be very confusing, and you don't want to make the wrong decision.
Yep. Because it will cost you tax-wise. So you want to speak to a professional when you get those. Don't just decide to get up and say, I'm just going to sell them. They're now vested. I'm going to sell them. It could cost you tax-wise. So you want, so you want to talk to somebody about that, right?
Yeah. Another additional financial consideration would be education and tuition assistance. So if you get a new job and it's in the benefits package that, hey, they'll help pay for your master's degree and you're thinking about going back to school, great option. Back to the conversation of salary versus benefits. If they pay for your school, that's pretty good.
That is pretty good, because then, guys, you're not walking away with a student loan. It just, most time they either ask you to work a certain period after they pay for it, or they ask you for to make sure that whatever you're going back to school for is in the field that you work, right? So because no job is gonna want to pay.
Sense.
No job is gonna want to pay for something that they're not gonna benefit from. So let's just be realistic. That is the expectation. Right?
So if you're like doing an engineering job and you go back to study
psychology.
Psychology or something.
And you expect the job to pay for your psychology degree.
They'd probably, good luck getting past that stage.
Exactly.
So those are the financial compensation part. Moving on, some, I guess, work-life things, PTO and flexible work policies. So if it's really important for you to have a casual Friday, then I guess
why not?
That better be in the benefits
package. A polo shirt.
But PTO, it's important to know how many days off a year you have. Some companies, you could work there for 30 years and you'll only get 2 weeks. It's crazy.
That is crazy. But also another quick thing right here. Oftentimes people tend to think that because I have unlimited time off, I could take all the time off that I need. Wrong, right? Think about this from a business standpoint, right? The company expects you to be there to do work. And if you say, well, I have unlimited time off and I'm not doing the work and I'm just going to be away for 2 months at a time, who's going to keep you in a job? No one will keep you in a job. So let's just be realistic about the expectations that we're walking into firms with.
Or, that's a good discussion point with your interview person. What does unlimited PTO really mean for your company? So those are kind of the...
Plus it tells you about the culture of the firm.
Right?
Because if you have that discussion, you'll have an idea what the culture of the firm look like, and also you'll decide if the culture is if that fits you. And if it doesn't, then you know that that's not the firm that you want to work for. So, looking for a job, walking into a job, it's not the salary. The benefits have a great deal to do with it. And you have to decide if the culture is where you want to be as well, because you have to be there at least 40 hours a week, right? So you need to love where you are.
Some other things are holidays, remote work. Are you going to be virtual a couple times a month or half of the week? With all the technology we have today, jobs are going virtual. A lot of them are. So that's one thing to consider. I think a lot of people actually consider that. Like, that's a big consideration. They can move. They can move wherever they want.
Exactly. They could move wherever they want and work from wherever they want to. And so they like that option there of remote work, right? So it's okay to like the option of remote work, but just make sure you work. That's the key right there.
The cases we've seen, it's like a household, they'll have to move because of one job, and it's easy for the spouse to move because they're virtual.
Right.
So it works.
Yep.
So that's the third one. Lastly, unique perks and programs that promote work-life balance. So this is what we'd call Employee Assistance Program, EAP. So this could be your company could offer counseling services, financial assistance. So they'll might have financial advisors at your company.
Yeah, I've read through a few PDFs where it's a government worker, and he has they have a defined contribution plan, a defined benefit. Part of it's going to be a permanent pension, and then they have another part that they get to contribute on a regular retirement account, right? And so somewhere in the package, deep in the package, it says, hey, if you need help with budgeting or anything of that nature, we have a financial person on staff that's willing to talk to you and help you. A lot of people don't know that option is there for them, and so you could get that option to speak to somebody to help you through that. So that's good. We also see legal services, and sometimes we like legal services because sometimes some clients can use that to just set up their basic estate planning documents, right? So that's a great thing to have and have access to be able to utilize that.
And then wellness programs. So what is that?
Wellness program.
It's like gym stuff?
Wellness program is like gym. People have the ability to go to the gym and have work-life balance.
I guess those big companies like Google, they have gyms in their offices and Zumba classes and all that.
or daycare. Some
daycare
work. So people have the ability to have daycare. So when you're looking at your benefit package alongside the salary, think about what's important to you, what's most important to you, and look for that in the benefit package. And another thing is people tend to think that they can negotiate their benefit. You can.
You can.
So don't walk away thinking, well, it's just I have to accept what they offer me. No, negotiate. Have that discussion. If you're worth having at a firm, they will look into that and offer what's best for you, right? So
when you're looking for jobs, you're typically in the driver's seat. If you have options.
I like to think that we're all in the driver's seat, because I like to tell people that you're not just interviewing me in an interview, I'm also interviewing you, because I have to work at that firm. And
possibly for the rest of your life.
Exactly.
So you gotta be in a good place.
Exactly. So it's both parties doing the interviewing. And so if you don't feel good, don't just sit there and just accept anything that's being offered to you. Know that you have options and look for options. So
yeah. Well, hopefully you learned something from this episode.
Well,
if you're looking for a new job,
we
got something.
Yeah, we got something before we go. For health insurance.
Yes.
We like to do this for health insurance, right? If you have, because we love HSA, we just love HSAs, right? And so if you have health insurance on the job and you have a high deductible health plan, oftentimes they have a HSA. If they don't carry that, then they're going to have a flexible savings plan, right? So I'm going to let Deven tell you about HSA, and I'll tell you about FSAs.
HSAs are triple tax-free. So you put money in there. The company could put money in there as well.
Sometimes.
It gets to grow tax-free, and you get to take money out for qualified medical expenses.
At 65.
And so what is there not to love about that? Because you're going to have, when you're 65, you're going to have medical expenses.
Exactly. And not only that, you could pay long-term care premiums with it, right? Which is good. Qualify expenses, medical expenses when you're at 65, right? And so what I love about it is it's portable. Right? And so you could invest it in the market, and when you pass away, you could pass it on to a beneficiary. What is not to love about that, right?
It's like a Roth, but better, maybe?
But better, because you can use it for, you get the triple tax free from it, right? Then the FSA, right, they are year to year. You get to put money in it each year. It's use it or lose it. HSA, you get to carry forward. FSA is like, if you don't use it, you lose it, right? And so they have dependent care where you have to put a certain amount and only certain things are qualified expenses under dependent care. And so you have two different buckets, one for dependent care and one for regular medical stuff. And so each year you fund it with pre-tax dollars and you have to empty it out at the end of each year. You really don't get to carry forward.
So what is it typically used for if you have to use it?
So you use it for, some people use it for their medical deductibles and different stuff that's not covered by the health insurance. And some people use it for dependent care. So if their child, if the job don't offer child care services, so then they could have their child in a daycare and it may fund some of the things for the child, right? Yeah. And so it's good for that if you have children, right? But of course, if you have the HSA, always go with the HSA.
Always go with it. Yeah.
If it suits you.
Yeah.
So let's say that.
Yeah, good.
If it suits you.
I was thinking of, we're not allowed to say
always. So let's scratch
never.
the word always. So if it's suitable for you and your needs, go with the HSA.
Go with the HSA. Yeah. Good. I think there's a lot of really good information in this. So if you're looking for a new job, take a look at the benefits package. Although the salary number may be very enticing, just take a holistic approach. Make sure you're going to love your job and love going in every day, whether in person or virtually. Mm-hmm. But yeah, hopefully you learned something, and we'll see you on the next episode.
Thank you, guys.
Bye.
Thank you for tuning in to today's episode of the Joss Brown Podcast. If you'd like to see more episodes, visit our website at jossbrown.com.